the biggest mistakes I see people making is focusing just on the price of the property, not what the property is going to make or cost them per week. So, based on what you're saying is you can get a property that costs more, but it might cost the person less to hold or make the person money if they get it right.
Exactly.
Hi guys, David here from Bugwash Property. We have with us today our good friend Mina from Solution Accountants. How are you, Mina?
I'm good, thank you, David.
Thanks for coming in today.
My pleasure.
And today we're going to talk about tax deductions. A lot of investors out there have no idea how tax deductions work, but it's really important to understand because getting a new property, for example, with the tax deductions available can make a big difference to your weekly cash flow. So, Mina, can you just explain to our viewers how the tax deductions work when investing in property, specifically new property?
Yeah, sure. So some of the common misconceptions, I guess, that people have is how does tax sort of add to their rental yields? So taking advantage of depreciation, so for a fairly new property, depreciation can be quite high in those earlier years. So using non-cash expenses to generate deductions which produce tax returns. So we sort of educate clients to understand that yes, the property may be producing certain returns, but you must account for those tax credits or tax concessions into the equation of those returns.
And could you just explain to the guys how the depreciation works on a brand new property for these things called fixtures and fittings, how that works?
Yeah, sure. So a quantity surveyor would come and survey the property. A new property would have brand new fixtures and fittings, and so the depreciation will be at its maximum in those earlier years. So the quantity surveyor would work out the effective life and provide a report. Those reports give us the depreciation amounts, which are then included into the depreciation expenses for that year.
And for a client, for example, who might be on 125,000 a year, buying a property around the $500,000 mark, in that first 5 years, how much can the tax deductions be roughly?
So they can be as high as $15,000 on a new property.
I mean, we see it all the time, don't we? Somewhere between $100 and $200 a week, which is makes a massive difference to a person's cash flow, doesn't it?
It definitely does.
Because one of the biggest mistakes I see people making is focusing just on the price of the property, not what the property is going to make or cost them per week. So, based on what you're saying is you can get a property that costs more, but it might cost the person less to hold or make the person money if they get it right.
Exactly.
Thanks very much, guys.
Thank you.